Okay, ladies and gentlemen, I welcome you to today's show. Today, this is the FS3 Tokyo Open Live Room, as you well know. Welcome. Good evening if you are in Asia and Tokyo. Good morning, especially if you are in Europe and it's early morning, and good evening to all of you from North America. Thanks for joining in today. This is the FS3 Tokyo Open Live Room daily show where we feature real trading at the very heart of the Asian session with me. I'm Giuseppe Basile, also known as the FibStalker. Thanks for joining. Thanks for Daisy, ED, Zed, FX, Todd, FX Ambassador, Roland, Adinda, and probably there'll be more coming in as we go through our normal routine as we start. My apologies for yesterday. It appears that the audio of yesterday's video is not being good throughout all the video. I don't know if the problem was on my side. Seems that everything was fine on my side, and today we'll try to improve. So I hope the sound is good. When it comes to trading, you know that I consider risk as a very, very important component of trading. If you manage and learn to manage risk, you'll be in for the long run, and in the long run, you will stumble in a method that works consistently. And at that point, it's only a work of discipline, proper risk management, and consistency in doing always the same things. Those of you who are professional traders or trade a lot know that trading is basically a boring business. You have to repeat again and again the same activity, the same analysis, and you have to keep managing risk. Okay, that time where you try to anticipate a move or increase your position size without a plan, that's the time when the psychological losses come in. Ask me why. In the past, it happened a lot of times to me. When you learn to stick to your system and stick to a plan and keep managing risk the way you do, even if that means taking small trades and realizing small profits, but consistent, that's the way to success. Trading Forex and its derivatives, futures, options, and CFDs, and other instruments with retail of exchange transactions involve substantial risk of loss and is not suitable for all investors. You may lose all or more of your initial investment, and leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review FS3 disclosure on the website. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. I will provide this information for your general information and educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated, will not be responsible for any losses incurred on investments made by attendees as a result of information in this webinar. Okay, thanks for joining in. This is my contact information in case you want to contact me. These are the last days to join my coaching program, 4th edition. If you're interested, just drop me an email. All right, so let's dive into the charts, there are interesting developments in a number of markets here. So we're going to review those developments and try to make sense of them and try to understand how we can anticipate the next moves here. So let me share the charts and then we can okay. I also want to say hello to everybody. Thanks for joining in today. I'm here for this review, and we're going to switch to the charts, which you now should see on the screen. What you see on the screen here is the SP500. I'm going to start from the SP500 today. This market had a nice move here, and it has been challenging and still challenging previous lows. I think that this market will eventually continue lower at this point. There was a first test of this 2051 area, a second test yesterday, and today we had a third test. This is the new bar of tomorrow, new tomorrow's bar here. So why this market is moving lower? This market is moving lower because it found participation at 2075. And you will remember yesterday I also mentioned I also mentioned the fact that the support at this level would actually reverse the pictures. However, this 50% has traded as a first target below the 61% level. So I think that this area eventually is going to leave way, and tomorrow we could see a move from 2048 here to 2032, and potentially even lower. So there's a free trade here at 275, which I believe has the potential to move 100 points here into 1971. So that's what I'm going to remove the short here. Okay. So excuse me. So this was one of the cleanest moves that was offered this week so far. Today is Wednesday, and typically I line up starting from the middle of the week. I tend to analyze a trade a lot in the first 3 days of the week, with basically 7-8 sessions where Tokyo, European and US sessions, when I'm actively analyzing and trading the market at the open, because that's when typically the majority of opportunity present, and then during the towards the end of the week, the idea is to remove take profits and remove the positions. So in inception at the beginning of the week, and basically removing and taking profits at the end of the week. Okay, you know that the dollar index has actually pierced an important level, and that important level was an extension from highs to highs, which actually has held this market for some time here. But this week we saw, and actually it was Monday, we saw the resolution of this 92.80 level here. And so this market, it's now, it's to me the possibility that this market will rally from here, it's very limited. There is one area we are following where this market could reverse, and that's the lows to lows here. Okay, so if this market rallies into 93.64, there is going to be a sell, and that could be a long. That could be a long for. It could be a long for the euro. So we will review also the level that we have to watch for the euro, which is very important. So the level in the dollar index is the 93.64. 93.64 is the short in this market. SP 500, as we mentioned, has traded 2075 with a target at 1970 area, say 70-71. Okay, so welcome. I want to welcome EDGFX, Todd, FX Ambassador, Roland, Adinda, Desi. Thanks for joining in today. Give me a yes if you can hear me well, please, so I get some feedback from you. And so the dollar index here seems, is still moving higher, also on the smaller time frame here, and but it seems to me capped by that 93.65. Thanks a lot, Todd. Welcome. And So there are a number of markets here that could be affected by the dollar index eventually going to test this 93.64 and then reversing. This is the euro dollar. First of all, we know that the euro dollar tends to trade against the dollar index, and if this market, if the dollar index gets into that resistance level, the 93.65, it is possible for the euro dollar to trade to 14.47 support. Okay, so this market is attempting excuse me, I was not able to remove the sounds, my apologies. And can you hear me? Able to hear me? So as I was saying, this market is attempting a bounce here. I don't think that this is okay. Very good. Okay, so it is attempting a bounce here, but I don't think it has actually tested 114.50, which is the level that I think we need to test here for a continued participation on the upside. And that would be a 114.47 into 116.95. So that would be a sizable trade there into that first target, which is right at the first high. So it's very important to capture moves like this, because this market could actually keep offering opportunities as it becomes more and more technical here, and it continues higher. So we will keep looking at that euro US dollar at 114.50 area here. That could be the level where this market bounces. Now, there's going to be sensible resistance here. There are people who bought around this area early in September last year, as well as recently here, that might put some pressure on this price and try to exit this price again. So this ride higher is not going to be easy. So either there is a breakout with a strong move like we saw during the last week here, and in any case there is a possibility not only to get into 117 here, but also higher. And you know that on the weekly time frame, my initial target for this market is 122.31. Now that the dollar index has confirmed a potential move lower, this market should follow up. The only point is to understand which kind of retrace the dollar index will put up, and this market will also, in observance of what the dollar does, come to trade either the 114.50 level or the 112.80 level. Okay. The US dollar Japanese yen has started a reaction right at that first target, clear profit taking here from a level that has traded and retested 111.80. You will remember last week we have made a call here. The reason for that is that can be seen on the weekly. The day before the BOC decision, the charts were already in play here from this 111.80. The market just went to retest this level, and I mentioned that we could see this market eventually retesting previous size, and that happened right before the just the 2 days before the BOJ there. And this US dollar Japanese yen now, I mean, it could continue lower from these levels here. So there is a good possibility that this market is just going to move lower here. It has retested a potential area of resistance, and that area of resistance can be modeled from this previous high, although it has been pierced. There is also an inner measure move on the 4-hour that explains this reaction in a better way. We can actually see it here, and it's being retested for the second time. So this becomes an opportunity to actually sell this market to 106.89 with a stop above ice 107.15, and this could keep moving price lower and continue this move lower into the second target. The second target is below here. The second target is 111.80. It's 103.90. Okay, sorry, it's lower. It's 102.48. Okay, so there is an opportunity here for a trade short. And so this is something that should take into serious consideration. Okay, and next we're going to review the next we're going to review here the euro Australian dollar. The euro Australian dollar has surprised here. We're looking for a continuation into the larger measure move, but a more close analysis showed that this market has retested and traded the it has actually is actually behaving like the Euro Canadian dollar, which has retested a past area of support, and that's exactly what we're seeing here. It is a market that responded in this area, went into highs, didn't touch the first target, and came back into this area. And now it's attempting again. So this past 49.12 level here is still there. Is still a potential resistance. We will see whether this acts as a resistance or just will just be pierced for a continuation higher in this market. Okay, so the Euro Australian dollar is basically behaving in the same way, and it's now challenging the 50% retrace here. It's being challenged, and there was no response to that level, so this market could actually continue higher. If this market could come back trading in extension, so we could have an opportunity to actually, if this market comes back, to at some point pick up this market and try to bring it up into 163.21. So this could be a sizable swing trade here. Okay, that's something that you want to keep in mind. The euro Canadian dollar, as we mentioned, I mean, it had a stronger justification for this. US dollar Canadian dollar is quite an interesting market. It has been moving strongly higher here, and what is happening is that the market started its move higher on as soon as he got into that first target. You remember that we mentioned that yesterday, so you want to review yesterday video as well. As soon as the market went to the second target of that extension short, this market actually violated the next measure move, and it's trading now 50%. There is a 50%, but this market might go much higher here before it actually corrects. And eventually this will correct as well, but at this point we might see higher prices in this market, even 134.48, believe it or not, and we will see the triggers for this market could go even higher into 135.77. However, remember that there is little support from the weekly time frame in this market, and that support is always important to actually lead this move higher for lead new moves higher, which actually we have not witnessed here. So it is not say that this market could not reverse and continue lower. I don't think this is the start of a new trend, but we will need to see whether this market stops. 128.73. It's a potential level here. US dollar Canadian dollar off the moon. Todd, as you remember here, I mentioned, and this market went to trade into our second target, 24.80. I think I kept you on the right path. As soon as that target was hit, profit taking plus the developments on the US dollar index have actually created this. What is going to stop? I don't know, and I'm not able to tell you. So far, the only level that oh yes, I'm happy that you benefited from that. So the only level that I can see, the first level I can see is this 128.78. Could this stop here? Yes, it could, and then start its move lower. If that's the case, how do we take advantage of it? We need to make sure that the sequence of measure move that is pushing this price higher came to an end, so it's violated. Okay, and I had no time yet to review this market. This market is obviously extended here, and one of the area that probably must be retested is this high to high here on the 4-hour time frame. So that will tell us whether this market is going to continue lower, or it's going to reverse here. Okay, so we will see. The US dollar Japanese yen move higher has not been as dramatic as going back to this market has not been as dramatic as the US dollar Canadian dollar. We've seen only profit taking right at that first target, but this market has the potential to continue lower here, and that would be the case if the US dollar index continues lower as well. This market is extended and has a second target at 102.48. Okay, so this would be 102.48. So we'll see what happens here. You know, this market can, again, as I mentioned before, can still continue higher, and it could actually go into 108, 132 here. But eventually it's going to find resistance. This would be resistance also lining up with previous lows here. So we will see what this market is going to offer here. At the moment, it's US dollar Japanese yen. It's actually bouncing between 107.15 and 106.12. Okay, so that's what we're seeing here. I hope that answer your doubts there, Todd, in relation to this market. And see that Carrie is in the room as well. Hi, Carrie. So US dollar Canadian dollar, we don't know where it's going to stop. The this market is definitely extended. We could see, you know, initial move lower into 127. 80 area here, even 128. Is this 128.30 that seems a relevant level here to be tested, but this market has a number of levels that has to be in different time frames here that have to be pierced before it is going to resume the move lower. So we have to be very, very careful here. Very, very strong move in the last 2 days. This kind of move are not reversed easily here. Okay, so we need to be very, very careful. New Zealand dollar, US dollar has had a very interesting development here. I believe this market has the potential to retrace into potentially all the way halfway back here. And this would require, of course, the help of a dollar index, but this market can move lower even if the dollar index is going to move lower as well, because the weight of the New Zealand dollar on the index is very, very limited. And there is a sequence of extension short on the 4 hour. This market could go into 67 or 67 4-year or 67 area. The Australian dollar has confirmed the trade of the weekly time frame here, 77.50, and then confirmed by the negative RBA 2 days ago here, actually yesterday, and that actually has kept moving this price in the direction it was moving before, which was already down, because the sequence up in the daily time frame was basically ended. And so what we are going to see in this market, what we would like to see in this market, it's kind of a retrace before it gets into this 73.30, which an area certainly that is going to provide some sort of support here. So we would like to we would like actually to see this market kind of retesting or moving lower here. Sorry, before moving lower, retesting a level, and there is one level that could come into play in the coming days. If that comes into play, there could be an area to watch there, and any new lows could actually become opportunities here. Could become opportunities to add before we get into that 73.30 level. Are there any questions there? Hi Kerry, welcome AA, double A. We have Kerry, Todd, double A, EDG FX, Desi, thanks Desi for your constant support, Todd, Roland. So, are there any questions there? Let me have your questions. I want to review the last major here. The hello. The another played pound here has violated an important area. That was the last area that I had on my chart for a continuation higher. So this market, although has not tested the 148.87 here, it could actually continue a correction lower into the 143.88 level. And we cannot exclude anyway a retest of 146.60. There would be definitely an opportunity to sell this market into 143.88. So 145.60 to 143.88. Okay, so any comments of market you want me to review? Pound versus Japanese yen. This market is just moving laterally on top of this weekly area of support. It came to retest. We came into this area of weekly support, so we can anticipate a potential reversal in this market and a potential continuation high, because this market is still trading into an area where there is confirmed, there has been at least so far confirmed move, a confirmed move lower here. So it's so this is the view I have for today, and I'm in a review of basically all the majors here. There is silver, which is in its correction. There is a potential weekly level 16-17 that could offer support. That level has not been tested yet. There would be anyway. There is also a daily level, which is the same one that has already traded, that falls basically in the same area there, almost the same area. So 17 is definitely an important area to watch for silver, which will tell us whether this market is going to reverse and move higher, or it is going to actually continue lower here, and at that point would go and challenge the next measured move, which would be 15.93. Okay, so that's what we can anticipate from this market, and we will see what happens when this market actually starts, and if this market starts moving. All right, so this is it for today. I'm going to start a summary right now. We started from a brief review of the SP 500. We noticed and commented on the fact that on the daily time frame, this market has participated on the 2075, and we took a short there. Our hope is that we can bring this short down into the 1971. So far, an important area of resistance has been represented by the 2051 area that has been tested once, twice, 3 times, and still being challenged by price, and price keeps bouncing out of it. Some people would say that there's a lot of supply because of this lateral move here. We will see the levels are the important area, information that I look at, and here there is a potential for a continuation lower into the first target 2032 of that measure move. Okay, so that's what I'm looking for. And the next we talked about the dollar index, and we spoke about potential 93.65, which could be the next area of resistance here in this market. And we're going to see whether that is going to act as a resistance for a continuation of the dollar index lower. The euro dollar has the potential to trade into this 114.47, but we mentioned also 112.81 as an important level that could actually, where price could be pushed to if the dollar index keeps moving higher. We reviewed US dollar Japanese yen. We mentioned this profit taking at that first target. The market has found resistance around this 107.51, respected the second time here. So we will see whether that will be enough to start the push lower in this market. This market is correcting laterally, and we could also review the timing, and we will do this tomorrow. We will review the timing using the one of the techniques that I featured in this show. Even though I don't use actively in my trading, I mean, it can give very good entries and can be used for timing as well. We reviewed then a number of other markets very quickly. We mentioned the Euro Australian dollar continuing challenging its next 50%. Euro Canadian dollar reacting on top of support 143.02. US dollar Canadian dollar that actually is challenging a 50% level, but it has basically broken its continuation higher. And the New Zealand dollar, which has the potential to retrace into 76. The Australian dollar that is potentially continuing lower, and any continue to move lower could actually be traded and picked up using an extension chart. And finally, we touched on the pound, and we mentioned the fact that this market has now pierced an important extension. So if this market comes higher, that could become an opportunity to sell this market into the 50% retrace of the recent move higher and potentially even lower. Okay, so this is the analysis for this market, potentially this level or even lower. Okay, so this is it for today. Thanks a lot for your attention. I hope this was interesting and informative, and I also hope that this keeps you on the right side of these markets. Thanks a lot for joining, and have a great evening. Bye bye now.